ஸ்டார்ட் பண்ணுங்க.
Dear students, today we will see about the anatomy of chemical engineering. Okay, how a chemical engineering plant will look like. Then we will see about how to maximize. Okay, then we will see the equations. Okay, how to convert. Okay, do the calculation. All those things. Okay, so this how a chemical engineering company, rough image of chemical companies, okay, like where from the raw material storage, okay, from raw material storage till the product purification and product separation, and where it is being stored and transported. Okay, so you can see the images like nearby railway or roadways, okay, where you can able to dump the raw material and where you can able to dump the final finished product. Then only we can able to transport in a very easy manner and all. Okay, or all these are the intermittent stages where raw material preparation, okay, raw material modifications, reactions. Some might needs just by unit operations, and some might need some unit process. Okay, and the product separation, purity of product gets separated, and finally it is being stored. Okay, this is about the anatomy of chemical companies. Okay, from the raw material to the sales. Okay, so the, just to show like the earlier one. Okay, the block diagram. Okay, raw material, feed preparation, reaction. Some process may need some reaction, or some process may need some disintegration, addition of something and all. Then product separation, there needs some recycling and all those things and all. Then in addition to the product, there may be some byproduct, co-product like that and all. Okay, if I make for example sugar cane plant juice means okay, even though my product is sugar crystals, okay, additional to that of sugar crystal, I may get some waste product like bagasse. I may get some co-product like byproduct like molasses. From the molasses, okay, which is the raw material for making liquor. Okay, all the beers, all the what is that liquors, brandy, whiskey, all those things and all. From the waste material, okay, once the product is being separated from the waste material, so-called molasses, you can able to separate all the byproducts and all. Okay, byproducts, waste, okay, purifications, and the product storage, and finally it will be stored. Okay, so till the feed preparation, it is called as downstream. After that, it is called as upstream and the downstream. Okay. So if you see about unit wise, okay, first unit about time value of the money. Okay, you will be seeing initially you will be reading about some basic terminologies. What is principal? What is interest? Okay, what is capital, and all those basic terminologies. Okay, simple interest and compound interest. Okay, simple interest and compound interest. Okay, money equivalents, some equations for economic study. Okay, if I borrow money, or if I give money to a certain person, okay, with the interest rate of so and so thing, in the period of 5 years, okay, how much money he has to return it back, or how much money I have to give it to the bank. Okay, when I borrow the money, so and so money from the bank with so and so interest for a so and so period. Okay, so I can able to give it back by means of simple interest or compound interest. No bank will give interest in a simple manner. Maybe from your friend you may buy, okay, you may borrow money, and without any interest you may give it back. Okay, that is called just money exchange and all. Okay, whereas if you go to the bank, okay, no industry you can able to, no industry will be started for spending from the pocket. No investor will come forward. Okay, so all the people, okay, we need to borrow money from the bank, or we need to sell shares. Okay, people who buy the shares, thereby, okay, indirectly they become the partner, or they become the investor of the company, and so on. Okay, so all the calculation will be based on either simple interest or compound interest. Only for friendship manner, okay, for simple interest we can able to lend money, and we can able to give it. Okay, mostly compound interest in the sense whatever the interest that accumulates in the principal. Okay, this is what any industries will do, any banks will do, or if you lend money, okay, all for maximizing the profit, they do with the compounding the interest and all, okay. And similarly, the amortization is another jargon of amortization in the sense like, for example, I buy a bike or car or home means they split into like an EMIs, that is called amortization EMIs. Okay, they split into various units. Okay, for say like if I want to pay back all the money, okay, within a year, within 5 years, 10 years, okay, they need to, the bank will amortize into the different segments, and accordingly I can able to pay. That is called as amortization. Okay, likewise depreciation in the sense like, if I buy a bike or gold, okay, bike next year by this time it gets depreciated to 10 years, okay, 10%, 20%, 30%, depending on the demand. For example, if I have a bullet like a which was existing 2000 or 2000 before, okay, that gets appreciated because that becomes an antique. What is that? Some name there, okay, antique piece like that. Okay, so Yamaha RX100, okay, it's like a, okay, no, there is no remake of that thing at all. So it is an antique piece. Okay, so that will cost more than whatever it is been bought. Okay, like that gold. Okay, always it won't have depreciation. It will appreciate all the years. Last year by this time 5% or 10%. Okay, this year it gets appreciated at all. Okay, opposite to that of depreciation is appreciation. Okay, whereas the buildings, whereas the mobiles, whereas the running devices, all those things and all, machines, all those things and all depreciates. Okay, and likewise the exploitation of minerals and all those things and all comes in depreciation and all. Okay, in unit 2, as I told, we will be seeing about the cost accounting, the income and profit loss statement, and similarly the balance sheets. Okay, so any industries will analyze the break-even analysis. Break-even analysis in the sense minimum amount where you need to manufacture this much product, then only you can able to meet out the expenses for salaries, expenses for the consumption of energies and all. Okay, that minimum point is called break-even point, break-even analysis. Beyond the break-even analysis, okay, the manufacturers, if the chemical engineers, if the mechanical engineers, if the electrical engineers, if they produce more products, then only they can able to get more profit for the industries and all. Okay, all the bonus and all will be based on the break-even point. Okay, beyond the break-even point, okay, for example, okay, Ford company or a Hyundai company, okay, the break-even point they will fix like 100 cars means, okay, they fix a target like 100 cars per month. Okay, for that maybe like 30 cars if they make, that will be the break-even point. Beyond the 30 cars, okay, if they target to achieve 70 cars means the 40 cars they make, okay, the profit for that 40 cars will be shared for the owners and employees, like a bonus or incentives, like a thing at all. Okay, so any company will see the break-even analysis and they will operate. Okay, with this we'll stop today. Thank you.